My name is Matthew Manson. I'm the president and CEO of Radisson Mining Resources. We are exploring and developing the historic O'Brien gold mine in the Abitibi region of Quebec.
Matthew, good to meet you.
Nice to meet you.
That's dangerous, isn't it? Right, we're here in Beaver Creek. You're here for a reason. You're bouncing around, I imagine, updating people, but also meeting investors. How's it going out there?
Yeah, it's great. I think we've got, we're chock-a-block every day for the full 3 days. It's exhausting, as you know. But we're getting a great response. It's a very positive experience for us. And halfway through it, midway point of the stage.
Yeah. Now, you started in June, so relatively new boy on the block. So maybe start telling people a little bit about your background and we can get into what you're doing.
Yeah, so I'm a geologist professionally. I came to Canada in 1987 to do a PhD after my first degree in Scotland, Edinburgh. My career has developed as somebody you hire to take an asset through the long and complicated development process. So my first mine was as a lieutenant with Aber Resources, building Diavik, which was a joint venture between Aber and Rio Tinto, the diamond mine, Northwest Territories. Second one was CEO of Stornoway as we built the Renard diamond mine, northern Quebec. That was the last big mine to be built in Quebec. Diamonds, both of them, that's its own story. I spent the last 4 or 5 years taking the Valentine project in Newfoundland through the same process. We got about halfway through the build. Combined the company with Calibre in January. That's a deal that's worked out pretty well. Calibre's done very well since. I think people were happy from that. So I was on the Calibre board for about 3 months, came off that after the deal closed. I knew some of the directors already at Radisson. There was a reach out, began talking, and joined July 1st, and here I am.
Right, and let's kind of talk about the history of Radisson, because it's important, where it's come from, maybe people's perception of it, and this kind of new in 2024 badge, which you use a lot in the deck at the moment. So what might people perceive it as being, and what have you been challenged to do?
Right, so Radisson is a company that's been exploring the same asset for many years. It's accelerated in the last few years in terms of the amount of drilling and the resource growth. But it's the O'Brien mine, and the O'Brien mine is famous in Quebec for being one of the highest grade producers right up until the late 50s, about 15 grams per half an ounce, 500,000 ounces. And there's some incredibly rich visible gold samples from O'Brien, which are in various mineralogical collections in the Royal Ontario Museum in Toronto. So it's famous for that. Company acquired it more than 20 years ago and has been slowly building up a new resource, principally to the east of the original mine. Now, O'Brien is right on the highway, Highway 117, famous Canadian highway, that connects Rwanda in the west and Val-d'Or in the east and runs along the famous Cadillac-Larder Lake break. So there's head frames on the horizon the whole way along. Of the O'Brien property sits in between land held by Nico and IM Gold, and then you get to El Dorado and Malartic's in there. And so it's a very richly prolific belt, right? So people will think of Radisson as the O'Brien project. It's narrow but very high grade. The drilling, 260,000 meters has been drilled through all those years with diligent, good quality work by the team.
Yeah.
And my perspective of O'Brien and Radisson coming in, and this is also the perspective of the new board members that have just joined, because there's been a bit of a reboot here, and there's some names that I think many of your viewers will know that have come on here. The view here is that it's at 1 million ounces, which is where it is now, at 10 grams in the indicated grade. And it's going to 2 to 3 million ounces eventually, but where it is right now, 1 million at 10 grams, it has already passed the threshold of the previous deposit in this area that was developed, which is the Lapa mine, which was produced up until 2019. Agnico ran about 100,000 ounces a year, 7-gram head grade, and it worked because it went on that basis to another mill, to the LaRonde mill, which was also owned by Nico. Lapis to the east of it and LaRonde to the west of it. That's an example of the heritage of mining in the Abitibi in Quebec, which is a lot of longer established mills that you don't want to close, getting successive ore bodies from different locations and bringing them in, hub and spoke. Right? So there's numerous examples of this. We see O'Brien at that 1 million ounce and growing as ready to be considered as a candidate to fit into one of these systems. right? So I came on board with that thesis. There's a day job here, which is the drilling, which is successful. We're in the middle of a 35,000 meter drill program. Continuing that story of knocking off these narrow high-grade hits, which is filling out this growing resource. But there's a bigger picture here, which is the commercial arrangements by which O'Brien fits into what is one of 5 mills owned by 4 companies around us, right? So on Monday morning, we were actually happy to announce that we've done an MOU with IM Gold, specific to one of those 5 mills, which is the Doyen Mill, which is the mill, a lot of names here, the mill attached to the Westwood Mine. So that's 21 kilometers to the west of us. It's one of the really close ones. 15 minutes drive on the highway, paved road. Everything's close here in the Abitibi. Fantastic logistics in this part of the world. Doyen was a mine that was built by Cambior in the 80s and 90s, ran successfully, big open pit. Then it was used to process a bunch of different types of ore, most recently Westwood, which was a satellite deposit found to the east. And it's got a 3,000 ton a day mill. Westwood's putting 1,000 tons a day into it. It's owned by IM Gold. There's capacity. They're interested in exploring more ore for that mill. We're interested in finding a mill. The two parties are in this initial non-binding, non-exclusive MOU just to do the technical work. But it's kind of it's put the flag up the flagpole here that we see O'Brien stepping up a stage here.
Right. Okay. That's a good kind of high-level view of this. Can I kind of step back a bit into this kind of phrase reboot that you've used? Talk to me about some of the team. Because I always say you've got to get comfortable with the team, the experience. I'll start with you. So remind us of some of the new names and maybe some of the old, which are relevant to day-to-day, hands-on type of approach with what you're doing at the moment.
Yeah, so during May and June, there were 3 directors retired from the board, 3 new directors came on. I joined the board. So at this stage, chairman is Pierre Baudouin, who was the guy that built the Detour mine, Canada's biggest gold mine, and most recently was the chief operating officer building the cheapest mine for Silvercrest in Mexico. Still on the board of Silvercrest. He's the chair of the board, very hands-on. I knew Pierre previously, before I joined. Michael Gentili is on the board, an investor, you know him. High-profile guy, brings a network as well of investors. A very constructive force and perspective in our company. Peter MacPhail joined when I came on. Peter was my chairperson at Marathon, former chief operating officer at Alamos. So he'd built the Young Davidson mine, the expansion of Island Gold, understands the Alamos Mexican assets very well as well. So there's actually, I think we're at 9 or 10 mines have been built by the people on this board now, right? It's probably a heavier hitting board than a company Radisson size deserves, but it's because we're all here with a view to the potentiality, right, of what could be created here rather than the exploration that has been the past. It's very much a view to the future.
Right, okay. I know you're relatively new to this, but you'll have walked on and you've had time to assess, what you've got and maybe, what the current plan is. In the current market, do you reassess maybe how you move forward? Because a lot of pressure on companies to get into revenue quicker because it's like money's tight out there. How do you, if that is the case, how do you finance something like that? Are you that attractive to financiers or strategics?
Well, let's kind of put that question in the context of what is a successful business model right now in mining, and what is more challenging. So my career has been single asset project development companies. It's probably the most challenging thing to do.
Say, yeah,
right. And doing that 10-year swim through the shark-infested waters to take a project from a greenfield discovery to a fully permitted, constructed, and successfully operating mine. And I used to give a speech to teams that I would build to do these things. That during that 10-year process, everything will change in our business, right? And the commodity price will change, the team will change, the regulations will change, the market will change, everything changes. So this is not that, right? This is a brownfield site with a good quality resource in a jurisdiction that has with mines and headframes everywhere, that is not going to require a mill. It's not going to require a tailings facility. It's not going to require major earthworks. It doesn't even require a camp. Doesn't require a road to be built. Renard had a 240-kilometer road. Doesn't require a power line. Allentown had a 60-kilometer power line. Everything is there, right? And it's going to be a very low capital undertaking.
Because remind us what is already there, and that's a former producer, but
it's right on the Highway 117. So you just drive off the highway and you're there. The power line goes by the location. There's an existing shaft in the old mine, kilometre down. So the mine, what O'Brien would be as a mine, doing that, what we think is an 80 to 100,000 ounce a year profile, at about 1,000 tons a day. That's how you'd right size it. You'd be building a ramp, underground mine, maybe rehabilitating the old shaft for bringing your ore up, not your people, but your ore. Water treatment facility on site, a couple of pads for waste rock and raw material, trailers for mine dry and office, and that's it.
okay. See, you know where a lot of the, you know where everything sits at the moment, and maybe some of it needs updating and a bit of money spent on it, but you're not sort of having to do mine planning per se in the fullest context there. You're having to finish off a 35,000 meter drill program, as I understand it, which will feed into, I guess, some kind of study. Where are we?
Yeah, well, there's three streams of work going on right now at Radisson. So there's the exploration, which has been our bread and butter and will continue to be. This is an ore body that is rewarding with drilling. It'll continue to grow. So it's 35,000 meters going on this year. That'll give us drill results coming out all the way through into next year, and probably a resource update by the middle of next year.
Okay.
There's then this newly reported collaborative technical work with IAMGOLD for the Doyen mill around the design criteria for our ore going to that mill, which is non-trivial. I mean, we've got to work out exactly how the flow sheet will work, the metallurgy, tailings strategy. And then upon the success of that work, where we can establish both parties, IAMGOLD and Radisson, see the viability of that working, we would immediately do a PEA, which will show what that project can do at that 1,000 tons a day with that low capital profile and that low impact profile as well. This is not an open pit mine. This is an underground mine with minimal facilities. So those are the three streams of work here. At the end of that, hopefully we've got a growing resource. We've got a viable direction for commercially where we're going with ore, and we've got a value statement on the project with its PEO.
Right. Okay. So at the PEA is the first point of contact with the kind of the economics for the market. Going off and doing the MOU, it's not non-binding and all of that. That's fine. It's all about the technical. I suspect you haven't yet begun conversations about what that would look economically in terms of...
Yes. No. And we were quite specific in the MOU that there's no discussion yet on... there are no criteria in the MOU around the commercial terms. We're silent. Is this toll milling? Is this something else? Well, we're not in that place yet. This is just a technical collaboration. We're also quite specific in the press release in the MOU that there's no guarantee that this will actually be the final thing, right? But thinking optimistically, right? Just think as miners, right? Putting aside ownership, commercial terms, what is on the horizon here is a Doyen mill taking 1,000 tons a day from Westwood, producing 120,000 ounces a year, 1,000 tons a day from O'Brien, 80 to 100,000 ounces a year. You got 200,000 ounces coming out that mill. All of a sudden, there's relevance there. It's securing the future of that operation down the road as well.
Benefits for both sides.
It's a win-win. Yeah.
Is that a similar situation with the other three mines in the immediate locale? Is there capacity there? I'm trying to think of competitive tension and advantage to you.
Well, so there are 5 mills that we would say is kind of credible candidates for our type of ore. Okay. We're not going to pretend that our ore is going to go to the Malartic mill, for example. That's a different beast. But there's 5 mills that credible candidates with 4 companies.
Right.
They're all a little bit different in context, right? The Doyen mill is an obvious contender. Since I've been the CEO of Radisson and I've been meeting with shareholders, I tell the story, and the first question I get is, so are you talking to IAMGOLD? Doyen's got capacity, and everyone knows that. And IAMGOLD themselves have been quite publicly open that Doyen has capacity, and they're seeking additional sources of ore. It's on their website. So I think there's a lot of simpatico here for that specific direction. But yes, there are other mines, and there are other hub and spoke traditions,
Right.
and there's other potential options there. Yeah.
Right. I guess what I'm trying to understand, I'm always fascinated by the company's business plans and their kind of management of that of cash. Either raising it frugally, spending it frugally, and then making margin. Right, because most companies forget about the margin, but for some reason in this space of ours, with the, I guess, a certain number of plants out there which can perhaps take feet, and you'll get there. Is it a case of that you see that as an interim before you finance building your own and taking control of that and capturing all of that margin there? Or do you think because this hub and spoke that's the people are used to in this district, you'd always be able to find a kind of outsourced solution for that, and then just it's a case of question of negotiating the best economics there? Yeah, because it gives us a sense of what's coming down the line in terms of CapEx requirements from you.
Right. Yeah, look, I can't get too ahead of ourselves with the ultimate finishing line here and all this. We've taken a first step to connect our ore supply to somebody else's mill, and there are other people with views as to how that might turn out. But I'll say from our point of view, from Radisson's point of view, we don't want to build our own mill now or ever, frankly. Right?
Good. That's a good conversation.
We don't want to build our own tailings facility now or ever.
Yeah.
Right. I've done that 3 times. Yeah. Right? I'm fully aware of the cost and the complexities and the risk. Right? Yeah. We don't need to do that here. We've got 5 mills around us. One of them is baking for supply.
Yeah.
Right. Baking is a colloquial expression. I won't characterize our conversation and go that way. Yeah. But it's a candidate for the ore.
Right. Okay. So that gives a sense of the model that you look to employ from lessons learned from the past, and that's what I'm getting at. It's fascinating. Management, the decisions you make impact the success or not of the company, and we're trying to get to know you and the decision making and the questions you're asking. Yeah. So you're discounting a lot of this kind of forward CapEx requirement, which is good. I like that.
Yeah. Yeah. Look at the major mine construction right now. Where do you have challenges? Right. Mills give you challenges. They require a lot of detailed engineering. They're expensive. There are areas of cost inflation. All the materials and the man hours are very heavy with man hours. There's been a lot of cost inflation in mills in the last 3-4 years. Tailings facilities are where regulators and stakeholders get most interested. You're doing a big, enormous impact on the environment. You're controlling very often acidic materials or cyanide and things. So there's a spotlight on those. Those are the 2 chunky and risk-filled, challenging items of a major mine construction. Yeah. If you don't have to do those 2, you can focus on the mine, right? You can focus on proper definition of your ore body. You can focus on getting ahead of your underground mine development properly. You can put the focus where this type of deposit really needs the focus.
So it's kind of like a bit of sort of engineering or engine design. Actually, is the less moving parts, the better. So in terms of your business model, less moving parts, less things to go wrong, less things to manage. And you focus on what's important.
Yeah. So if you're asking about lessons learned from people's careers, that's a big lesson learned, right?
Yeah. Okay.
And we had the opportunity to do it this way, right?
Okay.
And those types of mines can be done properly, done well. Yeah. And there's risk like narrow vein, high grade gold mining, the underground mine development, and there's been some circumstances recently in other companies, other projects where those things have been somewhat problematic. Yeah. But if you focused on that, if you're doing it right, if you're getting ahead of yourself with the underground mine development, if that's your main focus, these things, these high grade deposits, and O'Brien is one of the highest grade, the highest grade out there right now. It can be terrifically lucrative.
No, the only reason I was going down that line of things because when you said exploration is our bread and butter, I was trying to make sense of that when I know that you're near production. Most people say, "Oh, we're now a producer, value us as a producer." Yeah, well, but the way you're structuring it, I can sort of understand why you might have said that.
Well, I think again, Radisson has been a purely exploration company focused on drilling every year and expanding that resource. And when I say bread and butter, that's the heritage of the company, and that's what the team is focused on, and that won't stop.
Well, that's the growth.
That's the growth. That won't stop. We think there's 2 to 3 million ounces there, and it's at 1 right now, and we're going to keep going, right?
Okay.
But we're also stepping up a level, right? We now realize all that good work in exploration is, we've crossed that threshold. We've crossed that threshold where it works going to somebody else's mill.
Okay.
And how do we make that happen?
Yeah.
So right now the company is re-gearing the perspective and the focus here a little bit, right? We're not getting away from the exploration, I think, but we're heading that way. You know, I'm going to deviate a little bit to ask that question. 35% of our shareholders in this company are people, we call them in our deck, high net worth regional stakeholders. But they are investors, principally in Rwanda, very wealthy individuals in many cases, who have had careers in the mining business as contractors, as suppliers, or as property developers themselves. And they have been long and patient shareholders in this company. They've driven, many of them, by the Radisson signs on the highway for many years, and they want to see that project developed. Right? And that's an important stakeholder group and voice in our company, right? They've been very supportive over many years, and are very supportive in every day in the market as well, right? So I think we as a company, interacting with investors, hearing what investors want to achieve in terms of their investment horizon, we feel able to tell that growth story, that exploration story, when it produces. This is a deposit that will spit out, some beautiful drill results and lots of VG on a regular basis. But also, there's a bigger value proposition here, right? And there's the other direction that we're beginning to move into.
Right. So exploration for the blue sky upside, and obviously you got to keep adding those ounces. You will build a mine, but you will not process it. I think that's a very easy to understand. And I can also understand why local high net worths might be emotionally attached to this, but ultimately they want you to make money, right?
Yeah.
Can we focus on that a bit?
Yes.
Do you mind?
Sure. Of course.
Just Scotsman, you'll love it.
Of course.
Is like, I know the PA is not out yet, and again, I don't want to get ahead of myself in terms of the question, but you having spent some time and months here, you know what you're going to build and what it's going to look like. You know the grade. You've built mines, right? You must have a sense that this is going to be a reasonably high margin project. And the question of what can you do with that capital? How do you make it as efficient as possible? How do you make sure the margins as efficient as possible? How do you keep yourself in check in all of that process? We've seen a few people kind of fall over and stumble once they've got into the mining bit. So. What does the world look like once you sort of made that decision to actually start dragging ore out of the ground and sending it over to potentially?
Yeah, well, this is what miners do all the time in the back of the envelope. How do I make money?
That's what I'm saying.
So let's do the back of the envelope on Radisson, right? So resource grade's 10 grams per ton. Let's assume generously it's 50% mining dilution at 0 grade. That's pretty generous, but let's do that. So you got 7 gram head grade. That's actually what Lapa sent to the mill at LaRonde. So 7 grams is about a quarter of an ounce. So let's do spot. That's a fun. $2,500 US gold. So you're talking $675 per US dollars per ton ore, right? So what's that? 850 Canadian dollars per ton ore. So you're going to have a narrow, high grade underground mining operation, and you are going to send that ore to somebody else's mill that is efficient, and you've got efficiency of G&A and fixed costs. So you've potentially got a very high margin mining operation there. So what is the key to achieving that high margin mining operation? Keep the CapEx down so that you're not burdened with streams and royalties and expensive debt.
Alternative financing,
right? Expensive alternative financing. And I've gone down all of those paths at various times in my career, so I know the value in not doing that. And in the mining, making sure that your narrow high-grade deposit is mined properly, your dilution is correct, you've got your stopes prepared ahead of you.
Yeah.
You can feed the mill to its maximum capacity when the mill wants it.
Right.
And there's lots of examples of this type of deposit struggling because you're unable to feed the mill. You've got all these standing costs of having this big piece of kit that you've got to run. And you got all the people there, and you're still paying off the debt that you took out to build the mill, and all these things are happening to you, and you can't produce enough ore to break even, right?
Yeah.
And so to make this type of mine work, it's focus on really good definition of where your ore is, really good dilution control, really good productivity to get it to the surface. And if you're using somebody else's mill, somebody else's tailings facility, and you're not covering the CapEx of having to build those and justify that.
Yeah.
So you're getting a sense of how this is going to work. Right?
Well, yeah, you've done a good job there, and people should listening or watching this, or reading about this, should use some of these variables you applied. They can discount or add whatever excited or risk averse they are to that. Your approach there is well stated. What are the kind of the checks and balances in terms of the team? You've built some stuff and you added some people to the team. What more do you think you're going to have to do to kind of to the board or to the management team in terms of, adding to the A team? Because exploration is still a big part of this. That's got to feed into the PEA. And after the PEA, presumably there'll be more drilling as well. Yeah?
Yeah.
Okay. Because you've got to understand the ore body. Like if I take a group like the Pure Gold instance, right, where they kind of got into mining, it's high grade, etc. I know you're not... There's some parallels, but not many, right? It's different, but the point about checks and balances is the word I'm trying to make. You've got a group in Westwood Lake Gold doing a restart on that Madison project because they thought they understood the ore body, but in actual fact, it was turned out to be a wee bit more complex than they realized, right?
Right.
Perhaps should have done a bit tighter drilling, etc. to do that. So I'm not saying that's anything like what you've got going on here, but you get the point.
Yes, that type of deposit requires a lot of detailed, tight definition drilling.
Yeah.
Sinking an exploration ramp and doing a bulk sample to test continuity.
Yeah.
Making sure your definition drilling is really tight. You understand your ore body. You understand the geotechnical characteristics of your mining. All of that's very, very important. What sometimes happens in mine developments, and I don't want to be critical of anybody else here, is that if you're building the whole package, you get, and I've done that. This is an interesting angle. I'm getting into an interesting area here, actually.
Yeah.
The culture of a mine build. You get sucked into the mill. Because the mill's you got tons of people involved in the mill. You got all these contractors, all the headaches. You have all these contractors, which the concrete guy, the piping guy, and the electrical instrumentation guy, and you've got some engineering shop which is doing your IFCs, and everything's got to be, timed correctly, and that sucks your energy, right? And then you've got this big tailings facility, and that sucks all the attention of stakeholders and regulators and outside agencies, and you start neglecting the mining, right? And so, and this isn't a criticism of anybody else. I've witnessed this, right? And it's just a culture of mine development, right? If you can be disciplined and not neglect the mining, in my previous role, we were very disciplined in not neglecting the mining because it was a big open pit with a high strip ratio, and there was a selective mining methodology to do it correctly. So we put a lot of effort into that. And here, it's to avoid some of the pitfalls that are part and parcel of that type of deposit, without criticizing it, but that is part and parcel of this type of deposit. How well do you understand the deposit? Where's the ore going? And these are narrow veins, right? Have you drilled it properly? Do you understand the continuity, right? Where's it? There's been lots of examples. So backing up here a little bit, again, the business model that we have here, we don't want to build the mill. We don't want to build a tailings facility. Let's focus on the mine.
I like that. The reason I kind of like that is for what you said there. It's not only is it cleaner, but you used to get that scenario where if something goes wrong, the mill guys blame the mining guys, or the mining guys blame the mill guys, and it's not It's like your word culture. That resonates with me in terms of building that kind of culture here. And obviously, you just in here and they change the board level. How's that cascade down through the organization in terms of, every decision has a kind of commercial impact. So how do you, not impose, but how do you suggest to your team there's a way of working, which is your way of working, which then has that kind of positive, economic benefit down the line?
Well, I'm a geologist, actually, professionally. And so I've developed this principle in mine development that there are two must-haves. You've got to have a good resource, and you've got to have social acceptability. And lots of mines...
Inside or outside of the camp? What do you mean?
Well, just general. You've got to have social acceptability. I mean, you've got to have social acceptance of you're building that mine.
Right.
And you've got to have a quality resource. If you don't have one or other of those two, you have no business. If you have those two, everything else, and I apologize to all the engineers out there, but everything else is engineering, right?
You think engineering's admin?
Right, and that might be slow, it might be expensive, but it's fixable, right? No social acceptability is not fixable, and a bad resource is not fixable, right? So when I was looking at Radisson, I had that blinker on. My due diligence was focused on the quality of the resource, and it'd been done by SLR and a guy called Low-Capex as QP. He's got a very good reputation, and there was domaining and there was proper capping, and it needs to be drilled more, but the bones were there. It was very good. And social acceptability here in the Abitibi, right? Everything else is engineering. So you asked me a couple of questions ago. We're going to hopefully do this PEA upon demonstrating the viability of using the wine mill. And what comes next? Well, what comes next is going to be all of the, and what kind of team member do I need to add? It's all going to be on that side of things. It's how well do we, it's going to be geology and resource and mining engineering to get the ore body properly defined, mineable. Because the strategy, we'll have the mill and we'll have the tailings facility, we put all the effort into making sure the mine and the resource work well, right? And not get distracted by the building of the spaghetti at the mill or the enormous big tailings facility you're doing, right? So it's a long way to answer a question you had 2 questions ago about the...
Feels like 2 days, doesn't it?
What comes next, right?
Yeah.
But these are, but that's where I'd like to go, right?
Okay.
Where I'd like to have the focus and the team focus.
But again, that's what I find interesting. You got to have this long sight. Everyone thinks you're dealing with the stuff that's going on today. Like, this is what's going on today. You've got to be going somewhere, and everyone on your team have got to have the culture, the direction to go there with you, or you've got to drag them along, however you want to phrase it. But we so often see companies without a plan going, I'm just trying to do it today because the market sucks. I'm trying to give the market what it wants and not build something out properly. But you've kind of walked into something which is good, but the value hadn't been extracted, it feels like to me. And as you say, that kind of, it's a reboot or a step change moment for you guys, and it's now down to you to, I guess, deliver on that.
I think we see, with that 9 to 10 mine experience on the Radisson board, and all the successes and failures of all of us collectively. And we're a very happy ship. It's a really good board, and it's really functional, and it's great. There's a nice little business proposition here. There's a really good resource, great as king, in a great location with mills around. And you can put that together and have a really nice outcome from a business point of view, right? That checks all the boxes. And we're not interested in winning the Nobel Prize for mining by building the biggest, most expensive thing on the planet. There's a neat little thing to be done here, right? Which is going to make money and go for a long time and satisfy a lot of aspirations, right? And that's what this is about, right?
Sorry, I'm only laughing because the amount of people that come on here and say, we won an award. I'm like, I can't back that. Because it's not about the awards, it's making it work, getting across the finish line, if there ever is one, where you're getting into revenue, actually starting revenue, that's a finish line for me, where you can continue to build wealth for your shareholders through I don't know, dividend paying or growing the share price through growth, acquisition, whatever it is that you set out to do. I think that's what's important to me as an investor. So that, I really enjoyed today.
Yeah, thanks, man.
Great sense of what you're trying to do. Impressive stuff. And tell Hubert I said hello. I was impressed with him back in June.
Yep. Forward-looking statements fully apply to all the aspirational stuff we've been talking about here. You know, this is aspirational mining talk here. But yeah,
that's good. Thank you very much.
Thank you.